In this video, we're going to talk about how to identify high probability setups using price action. And when I'm observing structure like this, my goal is to identify the directional bias of the market, which at this point is fairly easy to identify. I understand what the market is for the most part doing because we have a bearish bias, we have a series of lower highs, lower lows. So this means I need to always identify a channel. Prices are always following a channel. And at first, since this is the structure before the market open, I'm generally sticking to tighter channels. I like to wait for market to open to make sure I'm reading it correctly when the trend is not that strong, because right now the trend is not that strong. Notice we have a downward working lower break, new extreme, but we already have a couple more pushes lower. The stock market is opening and notice price action keeps working lower. So this right here, strong EMA rejection is confirming to me that okay, there is a bigger downtrend working lower. We have continuous series of lower highs, lower lows. So I always need to find the best fitting channel. And at first I was looking for a channel like this. I'm going to connect the first two major swings. First swing, second swing. I'm just going to copy it, put it at the bottom. And right now I'm trading a clear bearish downtrend. Now, even though I know that I'm trading a bearish downtrend, that doesn't mean I can just sell anywhere on the chart because I don't know when the prices are going to pull back on me. Exactly like this. What I want to see a two-legged pullback second entry short to the key entry point, either the 21 bar exponential moving average or the trend line, and to see a nice high probability setup there. Okay, so prices are pulling back, so I'm going to redraw the shortened trend line. Okay, we're closing out, so I'm just going to tweak it a little bit to make sure it fits as it should. And you can see a nicely confirmation of the trend line. So this right here is a third confirmation of my key entry point, and this makes this trend line valid. So if this is going to hold, this second entry short is going to produce a scalp or even just some decent pullback. I'm going to look for lower high confirmation setup because this uptrend is in play. Now this second entry short is already quite tempting because you're bouncing off the trend line, but we don't have a clear break in new extreme. So let's see if we can get a lower high. Lower high is a confirmation setup when I'm not sure how the second entry short is going to react. And notice we have lower high confirmation setup, but this lower high is forming a little bit sketchy. There is no bullish bar in between. Had there been a nicer bullish bar prior, the pullback would have been more significant. This would have been an easy setup to take. It is kind of small doji, but this setup is definitely not bad. It's just a little bit more aggressive. I recommend being a little bit patient because it is still part of this stim and still bearish bar. You know, context-wise, good setup. It just didn't form that well. And price action keeps trending lower. So you can see this is where you're looking to sell at the key entry point where the correction phase will end. And the key entry point is going to give you clues where the smart traders are selling. So prices keep trending lower, and you can see how the trend line keeps rejecting prices and we keep working lower. Okay, so we have just a bunch of first entries which I'm not really interested in taking, and prices keep trending lower. Okay, I'm going to adjust the trend line a little bit because this is such a tiny break. It's very not significant. This trend line is still in play. So at this point, the downtrend still continues. I'm not even thinking about buying. And you can see that we transform into a very strong trend. How do I know this is a very strong trend? Because we have minimal bullish pullbacks. We have a lot of small bars that are just slowly but surely chopping lower. It doesn't seem that strong, but this is a very strong trend when you see prices just generating small bars and slowly but surely pushing lower. Okay, we're finally breaking outside of the channel. I'm going to redraw the short-term uptrend. I'm going to come from the lowest low, and I'm counting once again for a second entry short. Okay, we have a new low and we have a first entry short. Now this right here, as you can see, and I almost didn't notice this, I almost considered it as a second entry short. This is technically just a first entry short because we have a first break below this bar low, first entry short, but this could be considered a hidden second entry short, which means because if you go on a smaller time frame, you can see first entry short here, little pullback, second entry short. You have a bearish bar that almost had a trigger, it didn't. So for this reason, this can be considered a hidden second entry short, which is generally more advanced setup, and you only want to consider it in a very strong trend, which this is a very strong trend. So if you took a sell here, I can definitely see why, but it is more advanced and you need to know what you're doing. You need to make sure you identify the key entry point properly. You identify this is a strong downtrend and you know how the hidden second entry short works. Okay, and notice what we have: new low, first entry short, pullback, second entry short, and counting from this high because this is where we broke and formed a correction to the EMA. First entry long, pullback, second entry long. So we have two high probability setups in one: second entry short and a failed second entry long. And this right here is a decent high probability setup. The signal bar is quite neutral, so it's not the best, but you can't take a chance here because the EMA rejected again. We have two high probability setups in one. The downtrend needs to get new extreme according to trendline rules, and this is a very strong downtrend. So the signal bars can be a little bit more sketchy and prices keep trending lower. So at this point, when I was watching this live, I thought we have new low, but notice as I saw prices continuing working lower like this, once again, signs of a strong trend. I adjusted my structure a little bit differently because I have so much empty room here, and this is generally not how price action behaves. So this really begs the question if there is a better fitting channel. And this is completely normal as a price action trader. You can see that you don't have to be perfect, you just can be close. But with more price action, you're getting more information how you can adjust it. So let's see, it looks like a spike and a channel. So let's see if we can get some nice decent spike and a channel. And this fits fairly well. Something like this, because this makes the price action fit a little bit better. It aligns nicely with the EMA. You can see there is not that much of an empty room at the bottom. And overall, price action fits much better. But this is a very strong downtrend. You can see a very healthy downtrend working lower. So at this point, you're pretty much only focusing on selling. Okay, we have a first entry short, pull back, we have a second entry short above EMA, and this is also a failed breakout out of this congestion, so not a bad setup, but I would have preferred lower high, but we never get it. Okay, we have a new extreme, so I'm going to mark new high. I can even redraw the short-term uptrend here. Now, when you're watching this, what are you expecting? Only thing you're focusing on is letting the bullish correction play out and expecting for prices to create new low according to trendline rules. So don't even think about looking for long setup. Just wait the correction out. This has been a very strong downtrend, and wait for prices to offer us lower high or fill second entry long. Now, I was thinking even about lower high. Why? But because this is a very strong downtrend and this bullish correction is tiny. But you can see we don't get anything and market continued working lower. So I need to mark my new low because our spike and a channel reached a new extreme, which means I'm pausing, looking to sell. And when I see prices breaking above the EMA and EMA flattening like this, we are entering a brand new market cycle. The downtrend played out and we expect correction or reversal. So I'm automatically going to project where the key levels are going to be. This is what I always try to do when I see break new low and I see EMA flattening and a lot of price swings up and down, because according to market cycle rules, we're going to most likely enter a consolidation. Now, are you thinking about reversal? No. When the trend is strong, you're not thinking about reversal just yet. You're not thinking about full second entry short because we've been working down for such a long time. It's a strong downtrend. So in order for you to go long, you would need to see some proven strong uptrend, retracing way too much of the downtrend, because when the downtrend is strong, you really have to expect continuations. There can be many more legs lower and lower. So just don't think about buying just yet. This is just tiny correction. I'm going to redraw the short-term uptrend following the trendline rule. Okay, we have a break new extreme. Okay, I'm going to mark a new high. Right now, I'm just waiting for a push below EMA to get a failed second entry long. We can't get it. And notice we have a sideways correction and move back to the triple top of this resistance. It is a great tier 1 signal bar, one top, double top, triple top. And notice how sideways this correction is. This is always what you want to see when you want to sell here, because when it looks visually like a one leg, that's when you can have multiple pushes higher. But once you have one leg, broad correction, and a second leg up, that's a good sign that the bullish momentum depleted, and you can take the triple test short here off the resistance, because you're combining the bearish bias and the range rules, which means you want to buy low, sell high, but you're not thinking about buying low, you're thinking only about selling high. You have a lower high, but you cannot take it directly into the EMA. And then you even have a failed second entry long, which is confirming the resistance again, but the signal bar is doji like this, and by the time you get a bear bar, it's way too big. The scalp is halfway made. So even though we have a failed second entry long here off the resistance, very similar to the setup we had yesterday, there's pretty much no way to take. But if you have much better bearish bar, you can definitely take a failed second entry long. Okay, you're expecting a lower high, you can't get it, and market keeps trending lower. So I'm going to redraw the short and downtrend. Okay, prices keep going sideways. I'm not selling directly into the bottom of the trend range, nor am I buying. Remember, we established the criteria that we're not thinking about buying just yet. Okay, we have a second entry short I cannot take because I'm selling directly into the bottom of this trend range. Even though trend down is strong, I always want to sell high, not directly into the bottom. If there's going to be a failed second entry short, can I take it? I cannot, because the downtrend is strong and you can have many more pushes lower, especially since you just broke above this support and you're back in the lower third. So just gotta be careful. You can't take lower high directly into this. This is pretty much a no trade zone. You can't really sell because you're too close to these lows. You can't really go long because you never know how many pushes low there's going to be. So just be patient. And market is finally breaking higher. So I'm going to redraw the short-term uptrend. And notice the price action is just respecting, I'm just going to zoom back a little bit, is respecting the trend range. So in this particular moment, we have a range pattern, we traded down, and this was a strong downtrend. So once again, I'm not really thinking about buying. Let's see what's going to happen. Okay, we can see that we have price action working hard and we have very strong bullish momentum. So what you need to do, you need to redraw the short-term uptrend because you always want to make sure you're reading the channels correctly. But we have overshoot. Okay, you can see how far away from EMA you are. This is a depletion. Prices will pull back because EMA acts as a magnet. And prices are pulling back. And notice we're all the way back below the trend range and back below the EMA again. And since this was a strong downtrend, I'm leaning more towards expecting push back into the trend range, especially after such a decisive push, because notice we have 5 very big consecutive bearish bars, not a single pullback in between. So this is treated as a failed breakout because most breakouts will fail according to range rules. So you have a very strong push down. I'm combining a very strong downtrend with the overshoot and with the failed breakout. So the bias is more bearish and we have a great lower high confirmation of the failed breakout. Because we have overshoot, you can trust it. And once again, if this wasn't a strong downtrend day, you would wait for failed second entry long. But because this is a very strong downtrend day, notice I'm going to zoom back. Hopefully it makes sense how insignificant this bullish rally is compared to what we have on the left. So because this is a strong downtrend day, you can consider lower high, especially if it's so strong, and especially if this move is so strong and decisive. Naturally, you're expecting a failed second entry long. I'm going to redraw even the wider channel because we are back in the trend range. By the time I get a failed second entry long, it's a bullish bar. I would have preferred, hey, we take it higher above this bar and form a nice bearish bar. That didn't happen. So unfortunately, no way for us to take it, even though it would have been great context-wise because you're confirming the resistance again. Low high so far away from the EMA, so far down, I can't take it. But now what am I expecting? Since the downtrend is in play, and I want to see prices to go all the way down to the support, I have a new low, first entry short, so I'm expecting second entry short at the EMA. Okay, I'm preparing my limit order. It broke higher first, reversed down. This bar was very bullish, and at the EMA, completely reversed all the way bearish. I'm preparing my limit order, and this is a great second entry short. Now, however, you couldn't really caught this trade because you would need to use the stop order because this really happened extremely quickly. But this is a new low, first entry short, pullback, second entry short, great high probability setup right off the EMA. The downtrend is new extreme, and we formed new extreme for the downtrend. I'm going to redraw the short-term uptrend. Okay, price action keeps working higher. And notice what we have. What do you think? Is this failed second entry short good to take? Well, when I was watching this, I didn't like it. First of all, notice how strong this failed breakout was. This was a very strong bearish leg down. Very strong, not a single break above the EMA. And since we had a very strong downtrend, I'm really leery to be picking a bottom, even though we have established trend range. Once again, if you saw structural just as this trend range, you can take this, but you cannot disregard, you cannot have tunnel vision, you cannot disregard the main pattern. We had a strong downtrend, so even though you're trading in trend range, yes, you cannot completely ignore that we traded strongly down. So given the fact that you have such a massive failed breakout and a very strong downtrend, there can be many more pushes lower. You just don't want to be expecting for prices to keep working hard this quickly. You want to still be a little bit careful. However, I will mark it more aggressive. I'll mark it even green because you need to be quite advanced to understand the bias here, that this is strong bearish, the fact that this failed breakout is strong, and because it is nicely gliding off this trend line, I can definitely see why someone would take a chance here. So decent setup to take a chance because it fits nicely. It's right at the EMA. Unfortunately, you can see this can happen when the bearish bias is just still too strong. Okay, we have break new extreme. Actually, we have a new extreme here. First leg, break second leg. Market likes to move in pairs of twos. First leg up, break second leg up. You don't really want to sell directly into the support. I'm going to redraw the short and downtrend. And at this point, what am I expecting? This is pretty much no trade zone, because if I'm going to zoom back, we can see that the bias is so bearish for me to pick bottom and go long. But at the same time, I'm at the bottom of the very move. Notice entire day trading lower, and I would be selling at the very bottom after full breakout of this trend range. So since we are failing, most breakouts will fail. So you don't really want to be selling here. It is at the very low of the entire move. Just gotta be patient, but you can't really pick a long as well, because you know it's been so bearish to just wait for price action to do its thing. Okay, we're trending higher. I don't see any good setup here. I'm just gonna be patient. No good setup here. Horrible bar. This would have been a nice failed second entry long, new high, first entry long, pull back, second entry long. But the signal bar is bullish bar, and there was no lower high as well. So unfortunately, no way for us to take it. And price action keeps right now just going sideways. So I'm just being patient. You can see it's getting very tight. No clear bias. Okay, we keep working hard, so I'm going to redraw the short and uptrend. Okay, we have first entry long, but it's only first entry long. I'm at the top of the resistance again. And we have a second entry long, but it's already way too big. And notice, we are close to forming new high. At this point, I'm still expecting new extreme. But shortly after, you can see that we are pushing back below EMA. Now, this is technically not new extreme because we have double top. So this is very close, but I'm going to consider this new high. Because since we are at the top of the trend range, and we're already pushing way down, that one tick may not be that big of a difference, and bulls will consider it as new extreme. So since we are pushing below EMA like this, I'm now thinking bearish bias, we're at the top of the trend range, and you want to buy low, sell high. I have a lower high, but it's a horrible inside bar. Can we get a second entry short? Also would have been a failed second entry long. We cannot. We already have a break, new low. Okay, we have a failed second entry long, but the signal bar is bullish. I can't take it. I'm going to redraw the wider downtrend because we're still in the middle of the trend range, and I expect for prices to go here. So at this point, I'm still expecting a second entry short. If the EMA is going to hold and I'm going to get second entry short, I'm going to take it. But we can't get it. By the time we get it, it's so far down, far away from EMA, it ended up working. But unfortunately, I can't take it. So I'm going to mark my new low, new extreme. So as you can see, the price action is just oscillating up and down. At this point, the trend range is getting so long that I'm just respecting the key extremes according to rules of this trend range. Try to draw the channels tight, respect the breaks and new extremes. You can see prices are just oscillating in between. So I'm going to redraw instantly in my short and uptrend. You already have a break and a new extreme. Massive bearish bar. Are you thinking about buying? You're not. Why? Because the uptrend played out with the break new extreme. You have massive bearish bar rejection, and you have a lower high confirmation of a second entry short. New low, first break below, first entry short, pull back, second entry short, and a lower high confirmation of the second entry short. Because the uptrend played out and it's confirming the second entry short. I'm going to redraw the short and downtrend. I was expecting a failed second entry long, never formed. You already have a micro break and new extreme at the range lows again. So naturally you're expecting some stronger pivot, and you're not really predicting, you're just following the price action. Let's see what's going to happen. I'm going to redraw it a little bit wider. And price action keeps trending higher like this. Now, there are a couple ways how to draw this channel. I can either draw it like this and have somewhat of an overshoot, or you can extend it, which is valid too. And there's even a chance for you to draw it here, because you can have sort of like a spike and a channel. Now, based on how you draw it will basically dictate how you can approach this second entry long, because right now you have a second entry long that's pulling back that exponential moving average. And since this was such a strong spike, you expect for prices to retest the new extreme according to trendline rule. So if you are observing a channel like this, you can take this second entry long because the signal bar is so strong bullish that it is confirming you're going to get new high. However, if you're playing a channel, and I was watching this at the time a little bit like this with the overshoot, I was expecting high low. So if you have the channel with the spike change, channel with the overshoot, you can take it. If you have the overshoot, you need to be patient. and market already formed new extreme, uptrend played out. You have a lower high, but this was such a strong uptrend, not confirming much. You can't take lower high. And notice now you have a failed second entry long, which is reverse the pattern now, but it is not perfectly at the EMA. You know, there's quite a little gap here. I can only mark it aggressive. Had it close, much closer to the EMA, you could have considered, but since it's quite low, you know, this was quite a steep uptrend, more aggressive. Okay, prices keep working lower. I'm gonna just make it wider a little bit because the break is so tiny. Now you have a lower high confirmation of this failed second entry long, which you can consider taking because it's confirming right now the second entry long failure. EMA keeps holding. We have a second entry short, but the single bar is bullish. Had there been a better bar, would have been great. Second entry short, because you can see based on the EMA that the structure is reversing. The reversal pattern worked. EMA rejected here once, twice, 3 times, and I can already see that it's now too late, but you most likely don't want to be trading anyway. I forgot to mark this setup as a high probability, but we had pretty much a very strong downtrend that transformed into a trend range, and we've been in this trend range for the rest of the day. You can see the price session pretty much repeats itself because we have a low high, failed second entry long here, second entry short. The same thing is happening here, but the signal bars are really bad. So you always want to focus on selling at the top once the uptrend plays out and you see strong push below EMA. And at this point, this is pretty much a healthy trend range. But when the trend range is starting, don't be so eager to go long at such a big move down. You can think about starting to buy once the trend range is established and you have multiple confirmations this is truly a sideways structure. You can see the support is getting stronger and is getting more up and down, up and down. But right after the downtrend plays out and the market cycles begins, you still want to expect continuous bearish pressure because the trend down was so strong. So I hope you had a great trading day. I'm going to talk to you next time. Good luck with your trading.